Long before mutual funds became a nationwide investment option, one man laid the foundation for India's first private sector mutual fund with innovation, conviction, and a bold vision for the future. Presenting Vivek Reddy on MF Chronicles.
Indian mutual fund industry, UTI the behemoth, okay, couple of closed-ended public sector funds. What inspires a young man that day? What did he see as a gap? Why did India need private sector mutual funds?
I think the thing that one needs to give credit to for the interest in private mutual funds is Narasimha Rao and his 1992 budget, where he announced the whole opening of the private sector to mutual funds. And I knew mutual funds were big in America, and the fact that it is absent and it's a starting of a sunrise industry just seemed like an incredible opportunity.
How did the whole customer centricity piece develop in your firm?
Everything that we did was driven by the need to benefit investors' lives. And it makes sense that they want money back quickly. Okay, so you give it to them quickly within a day or two. They want transparency. They want to know what value they're getting. So you give it to them at NAV.
Probably very few people know that you were the first ones to launch the first money market fund in the private sector.
The desire to be first is just in our DNA. We just felt that we were innovative, we were first, and no energy to suppress that. And you have the capacity, you can do it, so just go for it.
Not every day do you get somebody who's been a recluse for 30 years. Not every day do you get somebody who's built an institution and then just suddenly, for lack of a better term, vanished from the landscape. Not every day do you get somebody who everybody talks about and can trace their lineage in investing to, but is never seen. Today, I'm very fortunate that I'm sitting here. And by the way, it took me a lot of time and effort. I had to chase this gentleman down. And the only, he was very willing. He was very unwilling initially. Then he became willing, but there's no time. I chased him down and I'm in Chennai today. And I'm interviewing one of the OGs of the Indian private sector mutual fund industry, the gentleman at the helm who launched the first private sector mutual fund. There are a lot of credits to him, but I'm actually at a loss for words. It's a fanboy moment for me. I've been looking forward to this for a long time. Without any further ado, let me just introduce Vivek Reddy.
Thank you, Vikas, for that brilliant introduction.
I just want to understand, and this is a very personal question. I've always wondered, you set up this entire industry in a manner of speaking, right? There was nothing before you came on board. You started everything. And then suddenly you went away. Or maybe suddenly is not the right word to use. You just chose to walk away from a lot of things. So what does a normal day today look like? I'm very interested in knowing that.
Yeah, my normal day, I would say from time I wake up to end of the day is to reap the benefits of the incredible bonanza that came to me of my mutual fund journey. So we can start with that. You say recluse and disappeared from the landscape. That is just the mutual fund landscape, but I've been very active in a whole bunch of things. So I feel that that particular brief flirtation with funds, which is about 8.5 years of the visible part from the time we launched the first fund till when we sold the company, a year and a half preparation to launch the fund before that. So 10 years was my journey, intense involvement in mutual funds. That gave me so much of unbelievable cachet of, let's say, not wealth as in financial wealth, but just the foundation to lead an amazingly meaningful, fulfilling, exciting life since then. So I'm involved in a whole bunch of different things: sport, fitness, architecture, design. I've got a lot of hobbies. So each day brings about something new and exciting. Whatever the day throws at me, I'm able to respond to it. But I would say that they're all in the area of creativity and imagination and friends and friendships and human connections. So I just leave myself open to those possibilities. And I believe mutual funds have given me the power to do that, indulge in all this.
And you're very actively involved in tennis as a sport as well, right? Tell us something about that.
Yeah, tennis. Okay, one, I trained to play tennis. I play tennis. And a lot of my friends, my very close friends are, say, Ramesh Krishnan, Vijay Amritraj. So they inspire me. They're my dear friends. So I'm in that circle. One of my impact initiatives is to also work with young kids and try to make them tennis champions within India and overseas, which is as challenging a task as building a mutual fund organization. So it's challenging, and you got to, tennis to me is a very real, tennis, nature, music, these are all very real things. You got to perform. It's not a corporate sort of a thing where, it just, there are words that can get you by. Here it's real. You got to be better than the other person. So that fact, the purity of sport is something that appeals to me as an individual, and you got to work hard. You got to do the right thing. So that is one of the reasons why I'm engaged.
I believe
in
you're
sport.
also a very good tennis player. At one point of time, I was talking to Shiva and he was telling me that you almost made it to one of the teams. You were that good a tennis player. Is this right?
I'll use Shiva's his own attitude. Everybody realizes at some point in time, all of us have dreams, right? We all want to win Wimbledon. Some point in time, we realize that it's not going to happen. So, and each of us come away. So, yeah, I was good enough to dream. So, and then at some time you realize that you're not going to make that particular dream. So then you move on and pursue other dreams.
So tennis's loss has been Indian mutual fund industry's gain, I would believe. But again, let me just start off. Way back in the day, this is 93. Yeah. It's almost like, I was reading this whole thing about Vikram Sarabhai launching a rocket from Sriharikota. And, there are visuals of parts of the rocket which was supposed to be launched, carried on a bullet cart all the way there. The choice of the location, the choice of the rocket, the choice of the initiative, there was no precedence. Okay. And I'm just trying to draw an analogy. Indian mutual fund industry, UTI, the behemoth, okay, couple of closed-ended public sector funds. What inspires a young man that day? What did he see as a gap? Why did India need private sector mutual funds? What was the vision? What sparked off that interest?
The interest, one, I think the story of Kothari Pioneer, there's so many people, it's a culmination of many stories, okay, and all of it, 100 things need to happen within those sub-stories for the Kothari Pioneer story to emerge the way that it did. I think the thing that one needs to give credit to for the interest in private mutual funds is Narasimha Rao and his 1992 budget, where he announced the whole opening of the private sector to mutual funds. And it was part of the whole, India had been on a very controlled sort of an orbit. This one man, he just turns it around, and not just mutual funds. He just changes the whole complexion of India with that one budget of his starting in 1992. And after that, we've all witnessed the benefit. India that you see today was, I think, is a result of that one great man, and the when you arrest the downswing and you put it on an orbit. So that created the opportunity. Me and my friend Shyam were interested in doing things together, and so I saw that mutual funds. When I first heard that from a neighbor friend of mine that is open to the private sector, my reaction was, "Oh, you mean in India, until now, mutual funds are not in the private sector?" I mean, I'd just come back from America where this public sector, private sector, that whole division, that terminology doesn't exist. Mutual funds are there, mutual funds are there. So I was familiar. I'd done a finance MBA. In fact, the summer of 1985, I still have that study where I'd written a paper with my finance course with two Jewish professors who became friends. I went out to dinner with them. One of the best summers of my life. Evaluation of mutual funds. So some rudimentary interest and background in mutual funds. And then, wow, this opportunity is open. Me and Shyam are looking to do things together. And I knew mutual funds were big in America. And the fact that it is absent and it's a starting of a sunrise industry just seemed like an incredible opportunity. So sparked by two things, friendship with Shyam, the ability that the sense of that I knew that my friendship with them and a partnership would enable me to do that, the entrepreneurship to fuel my dreams, and the vision of Narasimha Rao that created the opportunity.
So here is this man who's saying, okay, I've come back from the US and I think there is scope to do a private sector, although the terminology was not there in the US, to do something like that in India. let's drill it down further. What made this young man think that India was ready for the opportunity? At that point of time, you had UTI, which was almost giving guaranteed returns, if you will. You had fixed deposits going around 18, 19%. The equity culture was actually suffering pretty badly even after the Harshad Mehta scam, which happened. Okay. And wonder of wonders, you wanted to launch an open-end mutual fund where people could come in and go out at any given point of time. Why do you think India was ready for that? That doesn't make sense when you look back. I mean, now it makes sense, but at that point of time, I'm just wondering what your thought process was.
As a young man, the thought process doesn't involve any of the things you said. The young man, your thought process is filled with energy, dynamism, the desire to seize opportunities. I'm not even aware of the things that you're speaking about. The opportunity is there. Let's just go for it. So you keep your focus and vision set on that particular goal, and these side things that happen, those things are always there in an environment, whatever you set your goal on. So these things I'm not even aware of. Just wanted to do something. I felt we had the energy and the ability and the partnership with Shyam to do it initially, and just went for it. So these things really didn't play any role whatsoever. There was no analysis of all these peripheral factors. But the talking about, I would say that if you look at how Kothari Pioneer started and the unique story that we've spun out in the mutual fund industry, and I think it's fairly unique. I think you have to trace the origins back, since you talked about an open-end mutual fund, which I regard as the classical mutual fund. I don't accept closed-end funds as anything worth speaking about. It's the open-end mutual fund that really represents the industry. I think we have to really trace the origins. Like I said, it's a culmination of stories. The first story, the biggest credit, one is Narasimha Rao. The other credit I want to give is, let's trace it back to 1962, where a young man on the other side of the ocean, back in Boston, born in Boston, Jack Cogan, he became the chairman and CEO of Pioneer Mutual Fund in 1962. Okay, just to give you an origin because he's such a key player in this whole thing. Pioneer was one of the oldest or fourth oldest mutual fund in America. 1928 started. One gentleman, Philip Carey, started it. He was a CEO from 1928 to 1962. He died at 104. Kept going till office till 104 doing investing. Jack Cogan is the second CEO, okay, his blue-eyed boy. Harvard MBA, Harvard Law School, he ran a big firm. So he took over Pioneer Mutual Fund, and the linkage to Kothari Pioneer, and I want to give credit to Jaskaran Teja, his friend in Harvard Business School. Okay, imagine in the 1950s, these gentlemen became friends. And Jaskaran Teja was the Indian Foreign Service, studied, I guess, in Harvard along with Jack, kept up that friendship. And then 30 years later, he brings Pioneer and Jack Cogan to India to look for a joint venture. So I think that, and you have to remember the adventurous spirit of Jack Cogan. I think Shiva will tell you that in that entire 10 years that we worked very closely with Pioneer as partners, Pioneer is a very blue-blooded, very Bostonian, almost a Northeast sort of a fund. All the names that we worked with, Jack Cogan, David Triple, Bill Smith, Bob Butler, everybody was from the Northeast. They were all like white Northeast. They were not even like American. You wouldn't find Californians or Deep South or New Yorkers in that team. So very sort of an insular American, very American-focused organization. They take a big leap of faith and they come over to India. So I guess Jack Cogan was convinced by Jaskaran Teja and the potential of India. He saw the potential of India and he came in. So a lot of credit to that particular story and that friendship. It started in 1962. And also, I also want to mention that the people who linked us together, Pioneer and us, me and Shyam and Kothari's, was S. Venkataramanan. Actually, at that time, he was just a couple of 100 meters away. He lived. He had just given up ex-RBI governor he was at that time. So he knew Jaskran Teja from the IFS and the civil service. So Jaskran Teja had reached out to him. Venkatramanan said, "Hey, there's a very and there's a dynamic group in Chennai, Shyam and friends, so you should meet with them." So I think all these introduction, all these sort of piece of the puzzle had to happen, in a particular way for Pioneer to come in. And if Pioneer not come in, the look of the feel of the industry, at least for the first 5 years, wouldn't have been the same. Because no other international fund, whether Morgan Stanley, Goldman, or any of the guys that came in, had the ability of Pioneer to give us the technology and the whole skill system, the knowledge base to launch an open-end fund. So Pioneer was required. There was no other mutual fund that could do it. 62 also happens to be the year that Shyam and I were born, and we were like childhood friends from the time we were 4 or 5 years old. We kept our friendship together. So, and then the fact that we grew up together and we kept our friendship and we made the connection. So I think all these stories had to, Kogan's interest, Shyam and me being here, had to happen for the open-end mutual fund structure to be able to come to India.
Fascinating. It reminds me of the phrase, "It takes a village to raise a child." In a manner of speaking, so many people, so many forces had to come together to just make this entity, create this entity.
Yeah. And I think the story of what happened between, say, January 93 to November 93, before the mutual fund is launched, that has not actually been documented. No one knows, perhaps, except maybe me, because I was part of the whole thing. And I seized the opportunity that you gave. One, I feel tremendous amount of gratitude to the mutual fund industry because I feel I lead a very fulfilling life. And it's this industry, that my time in it, that sort of gave me the whole, not just the financial ability to be independent, but the whole feel-good factor. I felt so good about myself, that journey, that experience, the way I felt during the journey, the friends, the relationships I built, and part of that journey, the confidence that I got. So I feel amazing affection and gratitude for that particular thing. So it's important that we document the key players that played a role. First, I would say that Pioneer was the key foundation, because the fact that Jack Kogan is so Bostonian, and so the fact that he looked out internationally, and you have to understand that the open-end fund, the backbone of it is the investor servicing system that is required. And that's an unbelievable, difficult piece of technology. There are not that many people worldwide, even till today. There'll probably be half a dozen people worldwide who have the ability to do the back end of an open-end fund. Now, Pioneer didn't have it in America. The entire origin, they gave it to a third party. Just out of luck, they'd made another international acquisition. The only other international foray was buying an operation in Poland. And for some reason, that Polish operation had a back-end open-end fund system available. So Pioneer adapted that, took that over, and they never used it for the American operation, which is 99% of the business. And then they saw this India opportunity, and then they gave that system to us. Now, me and Shyam, on the one hand, we were like just looking to get into mutual fund, brilliant opportunity, didn't know much about it. The whole significance of a closed-end fund structure, the open-end fund structure, we didn't know that. We just wanted to be in the mutual fund space because we thought it was big and it was nice. Big opportunity. As soon as the joint venture with Pioneer was formed, Jack Kogan was the one who guided me and us in saying that, yeah, we have to launch the first mutual fund, but it has to be a first open-end fund. So, launching that, the desire and the competitive spirit and that surge of youthful energy to be first, that was there within us, okay? Pioneer didn't create that. They didn't insist that we be first. That was just a sort of a competitive, youthful thing. I remember playing tennis with Shyam one morning in MCC at 7:30. We were walking off the court. Then I said, Shyam, let's be the first mutual fund in India. This is probably, early 93. And Shyam looked at me, nodded. Vivek, let's try to be the first in South India. Those Bombay fellows are too fast. They're a bit too much for us. So then I nodded quietly back and I said, okay, we'll wait and see. But so that juice was there within me to really get going and be first. So being first was that energy and drive, but Jack Hogan's direction to start with an open-end fund. So the system was something that Pioneer gave, the software system and the people. They sent 2-3 of their tech people there, for 3 months at a time. They were camped over here. So that is one stream that needed to be done. Because to launch a first open-end fund on the first day required many different legs, okay, on which it stood. So the back-end servicing capability. Second one was the regulatory flexibility and open-mindedness of SEBI and Pradeep Kar, who was the executive director of SEBI at that time in charge of mutual funds. There was a brilliant grey book that had emerged to guide on which the foundation of mutual funds rested on. I don't know whether Pradeep Kar was the author of that, but whoever wrote that, I think, was brilliant, because that created, if the industry is what it is today, obviously, it rested on very well thought out regulation, which was embodied in that grey book, and there's been subsequent changes. So Pradeep Kar, the flexibility that he had to also take a leap of faith when we announced our first open-end mutual fund, which is just like nothing close, like you said, that is available in India, daily NAVs, very aggressive, ambitious promises we were making to investors. He, in a sense, also was accountable, right? Because for SEBI to clear our offer documents was a big step even for Pradeep Kar. Required a lot of thinking and analysis and boldness for a young government official to be able to authorize on day one, the release of such a fund. And also, I would say incredible speed and hard work on his side. I remember one weekend, maybe Friday evening, I used to pester him, so call him many times, just give us your queries. So I think Friday evening, he sent a fax over to me with about 35 questions on the offer document that we had given, because we went through many passes. Then over the weekend, me and Shekhar and my legal team and all that, Narayan, we worked on it. Monday morning, but Sunday evening, we couriered all his queries. We finished all that and we put it on his desk on Monday morning. Okay. Then he walks into office and I'm calling him at noon. Okay. I'm saying, hey, Pradeep, you got that. And by the way, that time it was a bit informal. I went to his house, had dinner and come home. So it became friendly. So I said, you asked us queries and all. So I responded. So where are we now and can we move forward? So then he said, hey, Vivek, I just want to tell you something. I'm the executive director of SEBI. I work for SEBI. I don't work for you that, when you send me something at 10 o'clock in the morning that I have to reply back to you by 12, the SEBI and the government doesn't work that way. So I'll come back to you. But that lightning speed was there, and Pradeep Kar and SEBI at that time were so lively and responsive and very interactive, which we have to give a lot of credit for, as a regulatory side. Then we also had to raise the money, right? Because we had a minimum of 20 crores for a closed-end fund and 50 crores for an open-end fund. And I think that's where, Pioneer, Jack Hogan, they had a very enlightened system of. Jack Hogan said that whenever he did a fund, he would always plunk down $100,000 in America, and he did that in each of our funds, is to show skin in the game, that confidence in his own fund. So that is a habit that he had, and he did that in our funds. But we still needed to raise more. So that's where I think Shyam's charisma and his contacts helped us raise the crucial seed capital that required to start the first open-end fund. And not easy to raise money for a new startup. Nobody knows mutual funds in India. So to be able to get that 50 crore thing, so Shyam had to do a lot of, me and Shyam had to do a lot of convincing. Plus, of course, all the marketing and the distribution that goes on, the forms. So the raising of money, the regulatory flexibility, the back-end service capability, plus all the other things, the boards of trustees, directors, you have to put all that in place and still be racing towards being first. So incredible energy and dynamism and excitement, I would say. But zero stress. There's no stress. I don't remember. It is just incredibly exciting. You just wake up in the morning and you're so driven. I think we would go, I think in the early days, maybe Shiva, I don't know whether the culture of Kothari Pioneer had changed by the time Shiva had, when I recruited Krishnan, Shiva, that on January 1st, 93, he was my first employee. It was just me in the office, nobody else. My work culture in America, I used to go at 8 a.m. in the morning. My boss was very tough about 8 a.m. Punctuality. On the other side, they'll say, okay, you can stay till 8 p.m. They're not worried about you leaving at 6, but they want you here at 8. I think Krishnan came late, 8:02, I think he came once. So I yelled at him. So I think Shiva won't recognize that aspect of intensity of the whole experience in the first couple of years. But it is very heady and very exciting to make it happen.
I'm getting goosebumps listening to you because I'm visualizing a situation that you used words like fax, courier, these are like almost gone. Who uses a fax anymore? You said I reached out to him on his telephone. Most people will think mobile connection, but you're talking about a landline, where people may or may not pick up the phone. And yet to drive all of this and bring it together, amazing. This is really a confluence of so many things getting together to bring this to life.
And I think this open-end fund, we started the industry with an open-end fund. Let's say if Kothari Pioneer had not been around, let's trace that journey if we didn't exist or it didn't happen. Just try to visualize how the private sector mutual fund industry would have evolved. It would have been, obviously, somebody would have started, they would have been the first, but they would all started with closed-end funds, right? Nobody had the ability to do that.
Guaranteed returns, closed-end funds.
Closed-end funds, even if it was a regular vanilla thing. Now, for the first 1 year, it would have only been closed-end funds, okay? And then the market imploded within a year from 93, November 94. By early 95, the markets had gone down. So the appetite for equities and mutual funds also went down. And Morgan Stanley and that whole, disillusionment with the mutual fund vehicle, along with the markets going down. So, as you know, 95, 96, 97, 98, there was no action at all. So, nobody would have launched an open-end fund. The only way you would have done an open-end fund is if some other agency had come about in India. CAMS did come about. But why would they do it for just one or two funds? They wouldn't even have launched a system. So there wouldn't have been any patronage. I figured that for like 5-6 years, the way that Indian equity markets would have evolved, private sector mutual funds would have just been closed-end funds for the first 5-6 years. And it would have taken the same, the first impression wouldn't have been so lively, so innovative, and so filled with excitement of an open-end fund. It would have just been a continuation of public sector mutual funds. It would have come in open-end mutual fund, but the first 5 years and the ability to create a strong first impression wouldn't have been there.
Yeah, and you're talking about SEBI around that time was launched. 92 was when SEBI came about. First set of regulations were 2 or 3 years after that. Yeah. So, by the way, did Pioneer actually come back with Bank of Baroda, or was that a different Pioneer? There was a Bob Pioneer mutual fund also which happened.
Yeah, that is a different Pioneer.
That might be a different Pioneer, yeah. Because I've not heard these names you talked about earlier.
Yeah.
I think it was Italian.
Yeah. Pioneer, the reason they sold it, they were over by an Italian company. So that is a different Pioneer from the Pioneer I know. So this spirit, these people, and throughout that 10-year journey that we were there, including on the investment management side, amazing amount of involvement and contribution by Pioneer, way not at all in proportion to the amount of benefit they saw from us, but just that affection to us and the amount of contribution they made to the joint venture was just unbelievable. I think it is just sheer affection and fondness, just a personal thing. They just, I think, liked working with us, loved working with us. Their contribution outweighs anything that they saw coming back. Because at that time, all mutual funds were small, especially in relation to a giant American mutual fund. We were just like trivial and tiny.
It's also interesting that the initial NAVs all started off at 940. So to get somebody at 10 rupees and open the NAV at 940 itself was a big leap of faith for most people who wanted to come in, right? Your initial 50 crore worth of investments coming into the mutual fund?
So we had a free run of an open-end mutual fund, I think, for about 18 months or so. There was no other fund house in India, even though they knew that we had done an open-end fund, who had the ability to do that. So what that did is it enabled us to build an organization. With an open-end mutual fund, you can sell funds daily, right?
Correct.
You can be in the front of investors. Whereas closed-end funds, it's only IPO, then you shut shop, you're not raising capital. So open-end funds gave us, so we were the only ones who built an organization with branch offices, people. And the first year was so heady and filled with growth, luckily from 93 to 94. So there was a surge of hiring, surge of growth, surge of investment and marketing, sales and distribution. And that sort of shaped the way the organization is built and getting in a lot of retail investors also over a period of time. I think by the time we sold 10 years later, the number of retail accounts we had probably equaled all the other mutual funds combined. Because we were small ticket retail. That is the only way that we could raise capital. We were not in with the big corporates or the big corporate distributors. HNIs and being in Chennai, HNIs were not going to come to us. They were with the other fund houses. So we had to grow with retail. So I think so it shaped the way that...
So as you were growing, these 18 months runway which you had, there was nobody else out there in your space. What were the unknowns which you encountered, which you didn't envisage earlier? You would have had a business plan, you would have a vision, you had a partner, you had a supporting Indian partner as well. But somewhere where the rubber hit the road, there would have been unknowns coming in. Take us through some of the anecdotes. What were the issues you saw out there? Your youthful energy, your team's culture. How did you just steamroll the entire thing?
I'd say that there are always unknowns in any business, but the feeling was very heady. It was a young team. We just, I think we were just blind. We just didn't focus on the unknown. We just saw the opportunity. The first 1 year, all our funds did spectacularly well. They went up they doubled in a year. When you're doing
that
so
always
well,
helps, yeah.
Yeah, when you're doing so well and you are, you're just fueled, the energy within the organization was just unbelievable. It's so sky high. So, I think it was just being super charged up. So the things about unknowns, uncertainty, risk, worry, those words didn't exist.
What I wasn't basically understand is how did you adapt something coming your way? How did you adapt? Is there something you remember?
See, what happened was that we adapted by seizing the opportunities, number one. We launched Prima Plus because at that time we were needed to gather assets, right? On the basis of the super performance of our first two funds, Blue Chip and Prima, we launched Prima Plus a year later. So we took that opportunity so that we adapted that way because now we had built a reputation. But 6 months after Prima Plus, the markets tanked and went down. And so there was a disillusionment. But I remember that the 3-4 years that followed where the market stayed dull and mutual fund interest was low, we were very active. We were still in the marketplace, meeting distributors, investors, IFAs. We were there. We needed to be active. And so we didn't really sort of retreat into a shell, or we were never defensive even about our performance. That was not our style, even if, say, Prima Plus or funds had declined 30, 40, 50%. We didn't really portray that, okay, we're done poorly, something. That's the market. Stay the course. You pick it up. We were out there in the midst of investors. The other thing we adapted was we just stayed. I remember my thinking at that time, when times are bad, don't thrash around doing silly things. We've been profitable from every year since we started. So even with a low asset base of 500 crores, 1,000 crores, whatever it is, and we had a large team. We were the only ones that ramped up our team. I think after about 5 years, we might have had about 200 people. Morgan Stanley, I always used to had about 6 people or 7 employees in their whole team. A typical mutual fund in Bombay would have had 20, 30. Had a large organization, and we were not the kind who let people go just because we couldn't pay the bill. So we always retained everybody. We didn't let anybody go. But like Shiva says, and knows, we kept costs low. We managed. We didn't do silly things and spend crazy money. but we kept the organization going for those 4-5 lean years, profitably without, and while still staying engaged. So I think that is one financial adaptation we needed to do. And I think being in Chennai really helped a lot, because in Bombay, your cost structure and all that wouldn't have allowed. Chennai, you can keep employee costs are lower, everything is lower. We were able to do that. And throughout it all, Pioneer's and Kothari's interest and energy, we'd have monthly conference calls with Jack Hogan. We'd go to Boston. They'd send people here. The collaboration was very active. And the thing that I really feel grateful about is the harmony and the affection that the partners had. The partners, our team, there's complete harmony. I don't think anybody felt any stress in the organization, neither the partners, not me, and not the employees. I challenge anybody to say that they were stressed while working at Kothari Pioneer.
Yeah, that's so interesting, because see, looking from the outside, when we used to look at Kothari Pioneer, we found that your teams were, what is the word I'm missing here? When you're talking to the customer, you look customer centric. When you're talking to the distributor, you're the most distributor centric. When you're talking to maybe industry forums, you're very industry forum centric. So there was this huge adaptability which was there. But I'm wanting to understand more on this customer centricity part of it. One would want to believe that whether it's open-end funds, daily NAVs, or your investment, investor services pieces, or your product launches, a lot of it would have been because you had your ears to the ground. Was it that, or you said, let's launch, let's get feedback later, or we see a latent demand, let's launch the fund? How did the whole customer centricity piece develop in your firm?
It's not necessarily ears to the ground, or even let's do it and figure it out later. Not even that. I would say a third reason. You apply your common sense. I would say the two reasons where you knew the model was established by a US mutual fund like Pioneer, the things that they did. We didn't invent the standards. See, for example, I would say that the credit for an open-end mutual fund, I listed out everything, right? Pioneer for the system, American mutual funds for the model that evolved in America to service the investors, investors coming in and going out every day. So I would say that the two things that created it is the model that was available in America. We followed that. And you use your common sense. Everything that we did was driven by the need to benefit investors' lives. And it makes sense that they want money back quickly. Okay, so you give it to them quickly within a day or two. They want transparency. They want to know what value they're getting. So you give it to them at NAV. They want to track their investments. So you just need to know that you need to put yourself in the place of an investor. And it makes so much sense to design a product this way. Don't need to do any market research. It's all there. It makes sense. So then just go for it.
Interesting. So let me just switch to your fixed income piece. A lot of talk gets around your equity piece, the way you manage your funds. But in terms of fixed income, probably very few people know that you were the first ones to launch the first money market fund in the private sector. Am I right? With a check writing facility. So how did you conceive that idea? Because here you are looking at equity markets, you're driven, you're doing a lot of things, and suddenly you look at a check writing facility oriented money market fund with a lock-in of 1 month. We were all completely flabbergasted.
Yeah, I think the culture, the narrative within the organization of being first and being innovative, right? We started off with that story. Everybody kept telling us that. So that fueled the whole spirit and culture of the organization. It's like anything in life, you start a particular behavior or pattern or habit. Okay, let's say that you want to be very bright and positive, and you act that way, then people tell you're bright and positive. So that fuels that behavior, and then you see yourself that way, and then you act more, and just keeps fueling. So we were innovative, we were seen as innovative. We just wanted to be the first in everything. We just wanted to lock in all the first infotech fund, first pharma fund, FMCG
I was about to come to that.
Money market. So we were always constantly on. The other thing that we were the first and maybe only fund in India till date to get a thing called a pension fund also. That is incredibly difficult, and that's why Shyam's work in Delhi helped, where we got some, because we knew that pension funds were big in America. So anybody who invested with us and promised to keep till 60, they should get some tax benefits, is the concept of a pension fund. And I think we were the only ones who were able to launch it. We were the first and only, and after that, it's not happened.
I don't think it has happened. Correct.
Yeah, so we had to get, and that was not to do with SEBI, we had to get Ministry of Finance approval, and that took us about a year or two, constant follow-up, and somehow we got that, and I think after that. So the desire to be first is just in our DNA. We just felt that we were innovative, we were first, and no energy to suppress that. There was no bureaucracy above me to suppress that energy, right, and that desire. So you just feel that freedom and exhilaration, and you know you have the capacity, you know you can do it, so just go for it.
It's been so long, I actually forgot that Templeton Pension Fund is actually Kothari Pension Fund. And my investment started there. I still have that investment. Okay, so I thought it was a wonderful idea. Of course, with lock-ins, this, that, it's just a trip down memory lane now. So when you're setting things up, I'm going to talk to you a little bit more about customer centricity. You talked about a few funds. You talked about the IT fund. I think we had the pharma fund, the FMCG fund. One is I want to be the first to do that. That's the energy, right? The second one is a pragmatic business decision, which this energy then fuels. What made you take the leap of faith in terms of the first sectoral stroke thematic funds in the countries? What drove you to launch that? What was the logic?
Yeah, see, these sectoral funds were primarily investment thesis driven. Our investment department had felt that the sectors that we identified, tech, pharma, FMCG, had delivered good performance, had potential to continue to deliver good performance. So it started with that thesis. And then it went to launching a product. We had to meet distributors and clients. The main thing, of course, in a thematic fund is two things. One is the whole concept of a mutual fund is diversification and giving the benefits of diversification to clients. By doing a thematic fund, that diversification is not there. And obviously, a sectoral fund has got more risk. The chance of a sector going up and down is higher. So these were the challenges we faced. But we had conviction in that particular story, and we said that our thing was that from a customer-centric point of view, that let's say customers had conviction in a pharma sector, they didn't want to go to a diversified fund and they wanted pharma stocks only. Then what choice do they have? They had to go and buy only those stocks themselves. So let us make ourselves available to those customers, investors and distributors who were bullish on each of these sectors and they wanted a pure play on the sector. So let's give them an opportunity to do that. So let the investors and distributors decide. We provide the vehicle to satisfy their thing. So we don't take a judgment necessarily on what, whether it's right or wrong. We give them the vehicles for them to fulfill their desires and their aspirations. But of course, the thing about the thematic fund, the challenges is that the variability and the volatility of a thematic fund obviously is higher because it's not diversified. Something we faced after we launched our Infotech Fund and Internet Opportunities Fund. Both collected an astronomical 600 crores at that time.
600 crores that time was huge.
Huge from, was it 10 lakh? Maybe lakh and 20,000, lakh and 50,000 investors each. So huge interest, huge investment from all over the country. And then the bubble burst and the values came down by 50%, of the peak. So obviously a lot of disillusionment and we have to be there to address it. And we did. I remember going, telling my team that we have to be there, we have to talk about it, the long-term potential of the sector. So it was a pushback we faced, but we did address it by being out there and meeting them.
Vivek, the acquisition of Kothari Pioneer by Templeton was one of the early landmarks in the industry. I don't think one had seen that sort of but that one had seen that sort of excitement around a transaction in that point of time, especially when it concerned Kothari Pioneer. You were there, you were at the forefront, you were leading a team, you went into the acquisition. Take us through that time. What were your feelings? How did things happen? Deal happening, not happening, pricing, shareholders. Would love to understand a little bit more.
Oh, wow. That was dramatic. You got that exactly right. See, well, what happens in life? I mean, Pioneer, there's us, Kothari's, total harmony, total bliss, amazing friendship and relationship, unbelievable partnership. It's a dream to get something like that where all of us are so happy to be together. But then real life happens. Kothari's had to sell, wanted to sell. Pioneer exited internationally and sold their business to Unicredito, an Italian bank, which didn't see a strategic importance for an Indian operation. So Pioneer wanted to sell. The folks who bought from Kothari also wanted to exit the business. So the decision was made to sell. And then we were quoting suitors. What I learned from that experience, and that took an entire 2 years. 1 year we were priming to sell, and then 1 year after almost zeroing in on Templeton, it took a year from the time we signed off to the actual, the transaction getting closed. And I remember that it's like sport, ups and downs. The one time the deal's happening, no, not happening. So I just remember telling myself there's no such thing as an end game. You think that the thing is done, and then some other new thing comes up 3 days later, 1 week later. So that 1 year was a torrid year, filled with so many ups and downs. You're building towards something, but it gets incredibly complicated. So that was also a lovely part of the journey. Maybe it did shape my decision post the sale and post my exit from that whole venture, is that when I saw myself from 30 to 40, I knew I'd created, built it, exited and sold and exited, right? So then when I saw myself wanting to repeat the whole process of again building, creating, establishing critical mass and then selling, that whole journey was pretty intense. So wanting to do it again from 40 to 50. See, if the sale had happened in like 1 week and boom, you have this brilliant value and it's as smooth as the whole business itself, then I said, wow, it's so simple, is it, to create a business, build a business, sell a business and just make tons of money. Maybe that would have, kept me in the fray. But I knew that it's quite challenging too, especially on the exit side, to sell it because it's very complicated, very long-minded.
Very interesting. So post Templeton, then you post this entire thing, then you got into your life's other pursuits. You were talking about tennis and all of that. Just on a different note, you were talking to me earlier about similarities between creating a company and creating champs. Having exited the business and having got into tennis, give us your assessment, give us your thoughts on why these two things really interested you, creating a company and then creating champions, maybe creating champions.
Okay, since I departed from the industry within a month or two, I sort of switched off. I went on to more what I thought interesting things, but I still remain an investor in funds. So to that extent, I'm observing what's happening. I'm seeing as a decision maker, as an investor, where I put my money. I have real estate as an asset class. Within equities itself, I can go directly into stocks, I can go in index funds, I can go into actively managed funds. So I'm looking at, the fees that I'm paying. I'm looking at the nuances of whether I put directly in equity, there's no fees, the dividends come to me, big dividend checks. So the many advantages of doing and going to index funds means there's low cost of compared to a mutual fund. So I'm studying mutual funds from that perspective as an investor. And to me, there should have been clarity from the foundation that we created of an actively managed equity fund, of presenting an amazingly phenomenal positive proposition. To me, it's not the case. I don't see the clarity of me wanting to go to an actively managed fund. To me, I'm always tempted. I'll save this 2% fee. It's not really justified. Go directly into equities. So to that extent, I've seen that is the one observation I have, and in that last 20 years, is that the potential of mutual funds and in capital allocation, efficient capital allocation, I think a little bit more attention needs to be paid on that. See, the asset gathering that has happened, obviously, mutual fund size has exploded in the last 20 years since I exited. Yes, I mean, proliferation of products, a lot of clutter, distributors and fund houses being engaged in, commissions and things like that, and not really training their clarity and focus on the value add. How do you guide your investor with clarity and with purpose and further their life goals? So some things can change on the asset gathering side, but I feel the big opportunity and the big need of the hour is how you deploy the capital that investors are entrusting to you. Right now, there's 80 lakh crores is what I hear is coming to the industry. So that has changed. So when we started in the first 10 years, we were not the big influence on the market. We were small players. Now with this capital that's been given to us, we can really shape the markets. We can shape capital allocation and really channeling it to the right entrepreneurs and investors. For that, a lot of intelligence, thought application has to be done by the investment department. And I'm seeing the structure of mutual funds and the way that it's organized. I feel that different models and paradigms need to emerge and need to be created for that particular crucial thing. The reason why mutual funds exist is not to gather assets or distribution or open-end funds, none of that stuff. That is all peripheral. The main product, the core of what we do, why we're in existence, is we take savings of investors who trust us with it, and we channel it to the best entrepreneurs and investors and companies who are honest, who have great strategies, who execute. They deliver great returns, and we just pass it on back. This crucial function of investments is, I'm observing, that has not changed from where we were when we started. Being a minor player, now we're a major player. We needed to have evolved in that space. We've done nothing. We have not evolved.
In these 20 years,
Yeah.
to initiate this change, what would you have done? I'm just looking still at the rearview mirror.
In the rearview mirror, see, as the revenues from this huge asset gathering picked up, I would have channeled all those revenues back into more investment research and greater intensity of investment research and allocating capital. See, when we started, yes, we had a simple structure of small funds, maybe 1,000 crores, 1,000 crore fund. We had a fund manager. We had a matrix organization of research analysts giving us information, little sell-side brokers giving us generic information on funds. So these were the sources of information. That's how the investment departments are structured overseas and here. 30 years later, that remains the same. Okay. Maybe a few more fund managers are added, maybe a few more analysts, but that core function in the organization, the way it works, when the industry has grown 1,000-fold. So this whole investment capital, the AMC revenues that come in. Now, how do I put in more AMC revenues rather than keeping my mind on asset gathering? The asset gathering now is happening. A lot of momentum, money is coming in. So let me turn my attention now to how to deploy that capital, all those assets that are coming in. So what I would do differently is completely evolve and change the way the investment department is structured. At the base level, I would say that with each fund, let's say it gets to a critical mass of 5,000, 10,000 crores. Now that in itself is giving me a huge source of revenue. Okay. So laser-like focus on each fund, create a set of maybe a fund manager and maybe 3, 4, 5 individuals. The team can't be too unwieldy. Let's say make a team of about 5 individuals. What I'm saying is that if you look at funds today in India and overseas, you ask them, how do you invest? They'll say, this is our philosophy, this is our process, we use these models, we use these tools, we use AI, this is our source of information, we have a rigorous process. You go to any fund house in India or overseas, it sounds exactly the same. And everybody will say they have a unique process, unique philosophy, we're so special, okay? So that's what they say. Now, in my view, that is just a starting point. And that is the process and philosophy that most fund houses have, that's a commodity. There's really no edge or value addition that they're bringing to the table, to the capital allocation experience with their process and philosophy. It's very shallow, if you ask me. Continues to be shallow in India. It's fairly overseas because of the costs involved for them, the cost of fund managers, research analysts. They don't have the luxury to be able to invest in India like how we do, or what I think is the ideal model to do it. The ideal model to do it is have this process philosophy. You need that foundation as to who you are and how you're going to invest. Okay. You code that and you keep that going. So those are the tools. That I would say is maybe about 20% of the whole investment process, just 20%. And everybody stops there. So if you ask me how I rate the investment department of any mutual fund, or I'd say I'll give you 20 on 100. Okay? And that's not acceptable. I would say I'll give another 40% emphasis and value to the group of individuals I take on to manage that 10,000 crores. Okay, let's say it could be a matrix, it could be a collective decision making, it could be one person in charge and 4 or 5 people around them. Depends on the individuals and their and their makeup. And the criteria I would use to hire those 4 or 5 individuals, considering now that how the industry is evolved, is now access to information and model now is a commodity. And intellect and Excel sheets and all that, those are all a commodity. You now need to move from analytical skills to much more on the humanities side and eclectic skills. You got to have a balanced temperament. You got to have the right skepticism. You got to have the right patience. You got to have the right optimism at the right time. You got to have contentment as an individual. You need to think calmly on what's happening. You got to have a wide interest on what's going on. You got to be a team builder. The EQ, the emphasis on EQ today and the human skills. And you got to get an eclectic bunch of people who have amazing conversations on all the trends happening in the world, in the country, and how it percolates down to industry and companies, and which companies are going to capitalize on those trends. So you need intelligent conversations happening, and you got to empower them with access to experts in different industries, and that might cost you a bit. Okay, you call in an expert to talk to your team. Okay, you have an AI, you call in an expert. But now the investors are giving you so much money, you are getting the revenue, right? So put it back into that space. So that is, I would say, 40% of it. So that still leaves another 40%, right, of how I would structure it. I would say another 20% is what I call an evaluation and an incentivizing committee, also of thoughtful individuals. Now, this team of 5 or 6 individuals will meet every day. They're together, they're chatting, they're creating value and thought process, which is greater than the sum of the parts. Each of the guys are very eclectic, very knowledgeable, very tracking everything that's happening. And then they're colliding their conversations with each other. You're creating more value and more thinking. Okay, so everybody is benefiting from that. But they're meeting every day, they're part of the core team. Now, you sort of create an incentivizing and review committee of, again, similar individuals with a diverse array of backgrounds. Let's say you have 10 funds of 10,000 crores each. These people, they meet with this particular team maybe 3 days in a month or whatever. And they ask the questions, what value are you adding? This is the market level of thinking. What additional thinking are you creating over here? What trends are you setting in where you're allocating the capital? Beyond sell-side brokers, beyond everything that you're hearing on NDTV or whatever it is. So, and then this team gets valued based on the new thought creation of how original thinking of where and how to allocate capital, and also the performance of the funds. So the performance speaks for itself, then okay, you don't focus so much on the process, but you also need to understand the process. So this evaluation committee, which structures even the compensation based on the kind of thinking that's out there in each of these teams, so that they meet, they're also engaged, they're paid, maybe 3 days with each team, and they recommend to the board and the CEO as to, as to how to go about it. And the board and CEO also, they need to give amazing importance, because you got to evaluate this this evaluation committee, you got to evaluate those teams. So your mind and headspace also needs to be in there. So that it just requires a lot of thought and attention and importance and emphasis on that particular function. And let's say we're getting 100 basis point revenues, the decision to allocate the bulk of that to this whole investment function. Now asset gathering is happening on its own. So be efficient over there, use AI tools, whatever, keep costs low, but allocate your capital over here so that mutual funds today have the ability to be leaders with our investment influence on where capital ought to be allocated. So things like index funds and all, which are like just followers, they ought not to play a role. We ought to be actively managed funds which outperform any other investment vehicle, which set the trend and which make the country much more efficient in capital allocation, because now we are the prime players in the equity markets. The foreign investor EPAs are retreating. We're now getting more and more into things. So we need to have that whole investment department function organized with a lot of thought. I would say a lot of eclectic humanities thinking, because the analytical and that thinking is becoming a commodity. This is irreplaceable. Even with the advent of AI technology, this can go up. But the human emotion, the judgment, balanced thinking, patience, calmness, maturity, that will never go out of style. And that's where the value addition comes. And that's where I'd put the money.
That's in this leaves out 20%, right?
The top 20% is the top management awareness and their ability to structure all these things. So the board and so they also need to buy into this, allocate the importance of the investment function. They need to manage this. You need to change some people. It's not working out well. So the whole organization has to be very investment driven. In today's terms, you have the luxury. So just saying, it has to be a culture of the organization. And that's where I come to when I'm trying to create tennis champions, I'm seeing all the components of everything that it takes to create a champion. I would say that investment is, for example, like research analysis. You have skills, your technique, you have fitness, you have mind skills, but to bring it all together, different experts coming in, and how do you communicate? How do you communicate to that player? How do parents get involved? How do you talk to each other? How do you plan your scheduling? So there's so much coordination involved. It's not just a simple thing of I've got amazing talent, amazing fitness, I've become a champion. So like that, I would organize the investment department to get amazing energies and skill sets and knowledges and attitudes to play to adding value to that capital and where it needs to be allocated. I don't see any of that happening, and that's what I would do.
It's amazing. I'm still processing it. I mean, this is a different level of thinking. It's amazing. And maybe that brought me to ask you my final question. If you were to set up your own mutual fund today, hypothetically, or forget about setting up your own mutual fund, you've actually mentioned that. But there is so much happening in the industry right now. Okay, a lot of good things are happening, especially in the digitization space, retail inclusion space, a lot of stuff. But going forward 20 years, from your vantage point of having been there, done that, seen this, seen that, what's your vision? How would you like to see the industry grow, and how would you like to what's your vision 20 years from now, if we have a discussion in MF Chronicles season 20? So looking back at this episode.
Yeah, so 20 years from now, if you ask me how a mutual fund would look like, see the power of the concept, which I was so convinced about even on day one before we launched Kothari Pioneer 30 years ago, is that it'll grow. I'm not surprised that it's 80 lakh crores today. In fact, if you ask me, I would have expected 80 lakh crores to come within 80 days of our first launch. The power of mutual funds compared to a fixed deposit or real estate, of investing in equities as a risk asset, steadily growing, beating inflation. There's no other alternative. There's no other place people can go, is my personal view. So based on that premise, I feel that mutual funds and equity mutual funds and all the other vehicles will grow, continue to grow, will be increased substantially in influence. Asset gathering is going to happen sort of by itself. So now my vision for setting up is I would focus entirely, if I was a CEO and the owner of the business, on how that capital which is being entrusted to me will be allocated. And to me, it is identifying individuals, like I said, let me go back to, I'll pick the same team that I had, Ravi, Shiva, Anup. If you look at Ravi, he's a life smart guy. He's a smart guy. It's just not when it comes to company. Very mature, sees things as they are, a lot of clarity in what's happening in the world with companies, applying his life smarts and applying it to companies. Shiva, incredibly, this whole perception of how to organize a department, I didn't leave with this concept 20, 30 years ago. It was formed over time. Formed over time with my interaction with individuals like Shiva or Anup. Very eclectic interests. They have interests in music and philosophy, and they're tracking everything that's happening and applying their observation of history and applying it to current events, so that will sort of tell them what's going to happen in the future and predicting which way it goes. Staying balanced, not getting over excited. Big thing is no ego and humility. When you want to be a fund manager, you have ego and it's really not going to make you see things as they are. You got to be also content as an individual. If you're always focused on your own, making huge amounts of money, the clarity is not going to be there. So you got to assess when you're hiring individuals, you got to assess these aspects, surround yourself with individuals like these. And obviously with a very active interest, Shiva, Anup, Ravi, very passionate about the craft of investing. They'd love to meet companies, discuss, analyze, go back and forth. To get these individuals who are very broad-based, very enlightened in many fronts, and with an interest in investing, a lot of integrity and the desire to benefit investors, pass on their craft to benefit investors, keeping that in mind. And if you do that, your asset gathering is going to happen all by itself. Cut down your fees by being efficient in other things. Allocate more capital over here. You don't need to market. You don't need to worry about plethora of funds or distributors. Have clarity there. Just keep one fixed commission. No negotiation. Whether you get me 10,000 rupees or 10,000 crores, there's a commission. So basically what that does is it liberates your team, your marketing team, the distributors, the investors, from that preoccupation of the fees, which is a very small part of the whole thing. Then the distributors will be able to speak to investors in a more personalized way and guide them properly. So my vision is much more enlightened distributors and agents, and a far more engaging investment department. And you have a very nice thing which will benefit the economy, and that's a foundation that can go on forever.
Fantastic conversation. I think we started off by talking about who's the father of mutual fund ka baap kaun hai. And when we're ending this conversation today with you, Vivek, I'm inclined to think that some home truths never change, should not change. Simple common sense should work always. A lot of energy, a lot of vitality will steamroll any perceived objection which you see in the way. Think big. But more importantly, while I heard you speak, we hear all of these things about these truths which come down. They're handed down year by year, fund manager by fund manager, and you go back and you hear a Vivek Reddy talk about the fact that have clarity, asset gathering is a byproduct. Have one set of commissions, focus on the performance, have a group of highly motivated individuals. You realize that at the core, this is what it really matters. So asset management at its core is actually investment management.
Yeah.
So it becomes asset management when you're talking about gathering assets. Otherwise, it's actually investment management. This was a wonderful, wonderful conversation, Vivek. And I'm glad you gave us the time to do this episode. I think this is going to be a very fitting finale to MF Chronicles in terms of its current avatar. Thank you so much, Vivek.
Thank you, because it's an honor. Like I said, gratitude to the industry, and you got it out of me, and it's an honor to be here, and I really enjoyed. I was building up to it, and I got very excited by it when you told me, and absolute pleasure to be here.
Thank you so much, Vivek. Thank you.